If you guys like how I do my chart analysis on YouTube and you want to learn how to do it yourself, click the link below to check out the Vee Trades technical analysis course. What's up, traders? This is Vee Trades, and today I'll be doing a technical analysis breakdown for the Spider S&P 500 ETF Trust with the ticker symbol SPY. If you want a chart analysis guaranteed to be done, please read the description below. Also, take a second to give the video a like and subscribe for more chart analysis. I appreciate it very much. This video is for entertainment purposes only. It does not constitute any financial advice. I will first go over what I see in the daily chart and finish the video off with the weekly chart. Man, another week has gone by and this year is ending pretty quickly. It's already June 12th. And just last week we were doing an analysis on the SPY for the daily and weekly chart. So let's take a look at what has happened since last week. Well, it looks like we just continued moving sideways, except looks like Thursday and Friday were pretty vicious sell-offs. So you can see that we were inside this consolidation pattern for a few weeks. I was expecting higher prices, probably back up to this double top right here, right around that 430 level before continuing lower. I didn't think we have bottomed, but we couldn't even get up there because prices were having a tough time breaking through this 415 level, which I'll mark with a horizontal line. You can see it was acting as previous support, and now it turns into resistance. So the bulls just gave up, and prices are going to reverse. At the end of the day, this is still a bear market or a downtrend. I wouldn't call it a bear market because overall we're still in an uptrend. This is just a bigger correction that people are not used to seeing. To put into perspective, we could just see the sell-off thus far. So from the highs to the lows, it's only a 20% drop. So it's not really that bad. I've seen bigger corrections and the market has turned around and reversed. So it's just a bigger correction than people are normally used to. I would not call this a bear market. I wouldn't follow the usual economic term of what 20% is bear market territory or whatever that nonsense is. Sometimes the market can dump 50% of an up move and still continue with the trend. It's just all a correction at the end of the day. So unless it's a really confirmed trend and the uptrend has played out, then we're probably going to be continuing down into a bear market. As right now, the uptrend is still intact. I'm looking for a retest of these highs and even exceeding it. And in my eyes, this is just a correction. But things can change. So again, we had a downtrend or we had a sell-off take place because, again, we did not get a retest of these lows. And looks like that's exactly what prices were doing. They're coming back down to retest these lows right here and probably even exceed them. So I was expecting a leg up to that 430 level, which cannot be reached. If we're not going to do what I'm predicting or what other people are predicting, most likely we're going to do the opposite. And the opposite is coming back down to retest these lows. So that looks like what prices are doing now. This is the first break of this bigger yellow channel. So I was expecting prices to come back eventually to this low, just not this soon. So already over pretty close to that 380 level. Could we get a bounce anywhere? Yeah, there's some support around this 388 level, which we're very close to. You can see that in the past we closed above it and bounced from it, so we could get another bounce, maybe a triple bottom, and then we get another leg up. Maybe not. Again, this market is pretty brutal, so it's unlikely. I would be expecting just continuation to maybe knock out this prior low, but this breakout was so quick where we might see a pullback to come back to fill in this gap or even test this breakout level before continuing lower. So it can go either way. Again, still not expecting this as a bottom. Very rare or low probability of picking bottoms. Again, still sticking with the down move. I don't think that this correction has played out yet. So you can see that every time we come up past this EMA, that when we break it, we cannot hold it. We cannot pull back and find some type of support and continue higher. So again, that's another sign to look out for. Once we start seeing something like that, I could be probably changing my bias. But as right now, once we get a break above the EMA, prices can barely hold it and continue higher. We just fall right through back down, and then we start just making new lows. So again, pretty bearish chart. I'd be just expecting lower prices even if we do pull back. Probably getting this low knocked out at the 379 level. If we don't do that, again, like I said before, we could pull back, fill in this gap that was created, or even test this breakout, maybe something like this, and then probably still continue lower. So again, nothing really bullish on this chart. I'll give you guys an update next week, but we can go and wrap this up on the daily chart. Here we have the weekly chart for the SPY. So again, I'm just thinking this is a correction. Does not look that bad to me as of right now. If we do a Fibonacci retracement from the lows to the highs, you can see that we're only at the 382 level. We met it. We can go all the way down to the 50% or even the 618 level and still continue higher. So again, as long as we don't get super low, I'm still thinking we're going to retest these highs or even exceed them. So again, the 50% retracement is right at that 350 level. I think that's another good target to keep in mind because it's right where this breakout was that prices have not tested. So it looks like prices are coming back to test this level before continuing higher. If it finds any support and bulls defend it, we're going to be reversing. And another reason is because normally in markets we will see two-legged corrections. So this was the first leg down, this is the second leg down. And if the second leg is longer than the first one and then we start continuing lower, most likely the first and third legs are going to be the same size. So if this is the top of the correction that we just saw last week and we start continuing lower from here, you can see that right at the tip of this arrow is right at the 350 target. So again, that's not a coincidence. So we could see a 5-wave Elliott pattern. So that's the first wave down, two-legged a correction, second wave, third wave down, fourth wave correction, fifth wave final before we see continuation with the trend. So again, since we're dropping lower, I got to look at lower price targets, and the 350 target makes a lot of sense to me, where it could reverse prices. So I would be expecting price to come all the way down here before I get semi bullish. So you can see in the past, normally we see two-legged pullbacks with the trend. This was the first leg down. We had a pullback. This was the second leg down, and then we continued higher. Again, if you look really close, you can see another similar pattern right here. We had a high. We had 2 candles or even 3 candles sell off. We had a green candle, which is the up move, and then a red candle, which is the down move. So that's up, down move, up, down, which is like this, a two-legged pullback, and then we saw a huge thrust up. So normally we see 2 legs of correction and a trend, very similar to what happened right here. This is a two-legged correction. Here's another two-legged correction. So again, you'll see two-legged corrections more often than three-legged corrections, but it is a pattern that occurs in the market. So I think that's what's going to happen here. So I would be expecting price to pull back to this 350 target now. So that's everything I see on the daily and weekly chart. Still a bearish trend. Definitely not a bear market as right now, even if we do surpass 20%. Looking for this 350 target, and that would be a good size correction for the market to reverse. As right now, don't think we have topped, but again, we got to go week by week. Thank you for stopping by and checking out my video. Make sure to check out the rest of the channel since you might be surprised at what you can learn. Leave a comment down below on where you think prices are headed. Also share the video if you want your friends to learn about the markets. Lastly, I appreciate any feedback to help improve the channel since I want to deliver great content to you guys. See you next time, and bye.